The market's got an awful lot to digest. It seems to me, at least in the last, 5 sessions, we've really rolled past the fears of the coronavirus and how much it could potentially impact or not corporations and economic growth. What do you think is top of mind for stock investors, or what should be top of mind, I should say, as we roll into Tuesday trade?
Yeah, so the coronavirus definitely seemed like a 2-week ago headline, and it's really starting to go on the backside of what investors are really worried about. Historically, these pandemics are really short-term in nature and have been pretty good buying opportunities. I'm pretty shocked on how resilient the market has actually been, given that we were sitting at all-time highs when this kind of started coming in the fourfold. The market really only pulled back about 3.5%, and as you mentioned earlier in the show, we're sitting at all-time highs and probably going to continue to add to that today. You mentioned earnings season a little bit. So far, Q4 has been better than expected. It looks like probably in 2019 we will avoid that earnings recession. And as we look out to where the street is for this year, top line growth around 4% looks reasonable, and a mid-single-digit EPS number around 175 looks attainable from our standpoint as well. So really, what multiple should go on that number? And that kind of gets us to a 3,000 to 3,400 number. So we're inching up on where we think fair value is. And given the political landscape in the U.S. here, volatility will be at the forefront this year.
It seems like Fed Chairman Powell has really sort of perfected, I should say, the way that he speaks to the market. And so I can't imagine many investors are nervous potentially about what he has to say here in the coming days. But then again, we haven't seen something like the coronavirus in quite some time. And it's always possible that he is concerned about growth. We've heard from several economists that they're pulling down their expectations for the first quarter to see growth be maybe around 1.2% or so. Should investors be paying very close attention to Powell today, or is that something you think is not really a big risk to the market?
I don't think it's a huge risk. He's done a pretty good job communicating that the Fed is going to be on hold this year, but if things do deteriorate from an economic standpoint, they will step in and be more accommodative. I think the big takeaway is how does it impact China? China's economy was already slowing given the trade war. Is 5% GDP growth this year in the full versus their target of 6%, and how does that impact the rest of the world? I think the U.S. probably is more perceptive to the Boeing production cuts from the manufacturing side in Q1 as growth kind of snaps back in the back half of the year. So those for the U.S. investors probably more what happens with the Boeing 737 and how fast can they ramp up production here.